All right, David Nicholas is with us, Nicholas Wealth Management President. David, first of all, before we go to the market, you're in Atlanta. I believe they recently shut the bars, the restaurants, the gyms, deserted streets in Atlanta, just like everywhere else?
Yes, sir. It is pretty deserted. Coming in this morning to work, there was almost no one on the highways, no one's on the roads. A good friend of mine owns a restaurant. He said his sales are down 85%, laid off most of his staff. He has his family working in the restaurant just to make it work. So, Stuart, it's truly heartbreaking for anything it's storefront, restaurants, hotel, retail. It's really sad to see what's been happening.
Well,
so we're praying this is short term, but it's pretty ugly.
It's the price we pay for shutting down the economy, and that's what we're doing by government order, shutting it down. All right, David. One of our themes this morning is whether or not the great American companies, the truly blue-chip American companies, their stock prices, have they bottomed? I was using the example of Microsoft around 130, 135. Was that a bottom? I was using the example of Apple, 230, 235. Was that a bottom? Are you buying either of those two stocks on the grounds that maybe they've hit a bottom already?
Stuart, I'd have to say no, it's not a bottom, and it pains me to say that. Now, is the outlook bright for these companies? Absolutely. So I think you just have to put yourself into two different camps. If you're an investor that has a long-term horizon, this is the best thing that can happen from a value standpoint. So if you've got 20 years to go for retirement, 30 years to go, this is a great time to buy. But if you're someone in retirement, this is really where you have to consider raising cash. So we're today raising cash for our clients. Because unfortunately, I don't think the bottom's in. We're looking at the 2350 level on the S&P 500. But I just have to believe that there's still downside from here. So if you could raise some cash in days like these, you may have much better buying opportunities around the corner.
When you say raise some cash, you're selling. You're getting out.
We are. We're not selling full portfolios, but we are raising percentage of our portfolios cash because, we just got to have the ability to buy when prices are even cheaper, and I think they will be. But there are some good names. I think the real estate world has been beaten up. If you look at a REIT like NRZ, that stock's down well over 60%. It's yielding close to a 20% dividend right now. That company's going to come back, and you can buy at a level like now that has a great income. But if you're buying today, you just have to understand and accept that you're going to see some downside fluctuation. But if you're buying for the long term, this is a great value to get in. But for full transparency, we're raising cash today for clients. We think there is some still downside left for this market, and we could see another 15 to 20% down. That's, for me, where I get really comfortable going all in on equities at this point.
Is your thinking affected by a couple of the reports that we got today? Ed Hyman, very well-known economist, says that in the second quarter, the economy will contract at a 20% rate. Goldman Sachs says in that second quarter, the economy will contract at a 24% rate. That's extraordinary. And next Thursday, hold on a second, next Thursday when we get the latest jobless claims report, Goldman is expecting 2.25 million new claims for unemployment benefits. Is that your thinking? Because that's depression level.
Stuart, we have to take those reports seriously. And again, I think me and you both, we have been such bulls on this market. But the reality is the data is telling us, is giving us warning signs. And we have to take the data seriously. We watch the unemployment claims pretty seriously. The jump that we saw this week was quite historic. We haven't seen jumps like that really in the last recession, the recession before that. So keeping this in context, I think the pain is going to be severe. I think it's going to be short term, but we just have to understand that the markets are going to react in the short term. As investors, we need to have a long-term outlook. But yes, those reports are some of the things that are concerning me. I'll be on a conference call at the White House this afternoon about small businesses. My hope is that we're going to hear small businesses, we don't want handouts. But we need to make sure that we can have access to loans to make sure we can keep our employees on the payroll. We want to be able to pay these loans back, but we have to have the ability to get liquidity in case this gets worse than where it is today.
David Nicholas, we hear you, and thanks for joining us, sir. Much obliged to you.
Thank you.